Welcome back. We also have Quincy Krosby with us now. He is the Chief Market Strategist at Prudential Financial. Quincy, great to have you with us. Wanted to get a picture and your sense of the kind of factors that are going to be at play now in December. We all know that things quieten down towards the end of the year, but a lot of momentum for now, given all the vaccine buzz, of course, even the stimulus package that will potentially lift Wall Street.
Well, yes, absolutely. The question is whether or not the Federal Drug Administration in the U.S. gives Pfizer emergency use or authorization. That could come this week. One of the reasons for the market's performance today in the U.S. had to do with a headline coming out of the Federal Drug Administration talking about its safety and efficacy. This should lead to a formal authorization this week, and then Pfizer will begin within 24 hours of receiving that and begin to deliver and perhaps even start to inoculate. That has been very good news for the market, as has, by the way, the beginning of the inoculations in the UK, because now we've gone from the theoretical to the actual. The biggest question now going forward, at least for the U.S. market, is whether or not Americans begin to take the vaccine. Of course, they're going to begin with the healthcare workers, those who work in the homes for the elderly, and those with pre-existing conditions. I mention this because many of the surveys have suggested they don't want to take it initially. They want to see if there are any side effects. There's a headline actually now that 55% of the New York firefighters do not want to take the vaccine initially. Again, they want to wait to see if there are any side effects. So, in the U.S., we need to have 70% of the population to have herd immunity. The hope for this is that over the next 6 months, the American people will begin to see that the authorizations for the general population were given with science behind it and with care. That is one of the most important elements. So that's going to be a positive for the market. Why? Because it is the ultimate stimulus. Having a vaccine globally is probably more important than fiscal stimulus or even monetary stimulus. Once the world is vaccinated, we will go back to the world that we were used to. And we're seeing it in the sectors, by the way, that are beginning to perform, not just with a headline, but I think you're beginning to see the building of long-term positions in the most dormant, the most vulnerable stocks and sectors to the COVID virus.
Absolutely. And I want to, also ask you about fund flows, Quincy. Given that you're starting to see that that rotation and you're expecting further gains when it comes to, global markets, do you also see the fund flow picture continuing to look strong? Where do you see the money moving?
We see the money moving into those sectors that were doing well when the virus had eased over the summer. You began to see, for example, exports picking up from Germany, for example, to China, but also U.S. industrial companies, when they're looking from the Dow, Honeywell, just to give you an example. Even, the conglomerate General Electric has been given investor interest at this point, given that they have a strong CEO. But overall, there's an ETF, the XLI, which is the industrials. We expect those to continue to do well as the market begins to see the global healing begin yet again. Even though the headlines are awful in the United States, the expectations are that we will start to see the cases begin to peak and come down. Also, the materials, they have been doing well. The industrial metals, the companies that produce these have been doing very well. Obviously, China beginning before the rest of the world to come back and the economy healing. So those are also important. And then, too, we're going to see the small and mid-cap names in the U.S. continuing to do well as the world becomes vaccinated, but particularly obviously in the U.S. So there's a host of and raft of sectors that are going to come out from dormancy. Probably the most desperate ones are the airlines that have suffered tremendously. Once we start to see a building of positions from institutional money managers, you'll know that this is not just a trade, but it is an investment on moving to the other side of the pandemic. Casinos moved higher, cruise lines moved higher, hotels. They are the last group before we get to the feeling that, at least in the U.S., that people feel safe to engage the way they did pre-COVID. I always look at Disney, by the way. I see Disney as my bellwether consumer discretionary name. The reason is they have the parks, they have a cruise line, they have ESPN, they own 80% of that, which is sports. They need advertising, and it's a very popular station. They pick up the sports from all over. But you need advertising. You need people in the stadiums. So once you start to feel that we are getting closer and closer to the other side, I think you begin to see Disney see investor interest, and again, not just as a trade. This is where we are in terms of the delivery of the vaccine. There are a raft of names also associated with that. Everything from some of the airlines that are the cargo airlines to carry the vaccines, and also the delivery once they get into where the sites are for holding the vaccines. So in the U.S., we have Walgreens and CVS. They have an arrangement with the government to administer the vaccines. You have McKesson, very much involved in logistics, and you have FedEx, and you have United Parcel Service, also involved with the government having contracts. So there's a complete raft of companies associated with the delivery, including Corning. They have been manufacturing the vials, and they have to have very special vials for these vaccines. And even Americans, I know, are looking online for the company that's actually providing the dry ice especially for the Pfizer vaccine that requires tremendous amount of cold air on that cargo. So this is, the very beginning, the enveloping of the end. It's going to take time, and we're probably not going to be there until, the end of 2021. But for the market, which is a discounting mechanism, they're beginning to look now, and they're going to beginning to look, as we get into the first quarter and second quarter of the year. It is, I think, the beginning of the end, albeit slowly. The market is at risk for problems in the distribution, for problems in perhaps side effects that we don't know about that crop up. That will be a net negative for the market. But overall, there are 90 entities that are currently in clinical trials. And we already know that at least 3 or 4 of them are coming towards the Federal Drug Administration for authorization, at least on the emergency level.
Quincy, great chatting with you and getting a detailed 360-degree look really at how the vaccine and all these developments are going to impact stock market moves. Great chatting with you. Thanks for taking the time out.